Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about the standard deduction amounts and what you may qualify for this deduction. So I'm going to get the presentation started here, and I'm going to walk through each area with you and try to make it as easy as possible for you to understand when filling out your tax return. Now, the biggest question most people have is how much is the standard deduction? You can see on the video here you have the option of itemizing or taking the standard deduction. So you kind of have to outweigh the benefits of each, because you only have two options on your tax return. The standard deduction is the easier way to report on your tax return, but in some cases it's going to be a lower deduction than itemizing. So that's why this is important to understand what factors may lead to you deciding of having a standard deduction over itemizing. So I'm going to walk through this. It depends on age, disabilities, or if you're claimed by another taxpayer, single or married, if you're filing jointly or separate. Now the amounts, you can see I'm bringing them up on the screen here. If you're single or filing married but separate, it's going to be $5,350. If you're filing married jointly on your return, it's going to be $10,700. Now if you're single, you have to qualify for the head of household, which in some of my other videos, or you can go to our site at HarborFinancialOnline.com and see if you qualify for the head of household, because this will go to $7,850 if you're single versus just $5,350. So you may be qualifying for the head of household and not even know it. Now there's increases and decreases of standard deduction based on your income, which again you can look into further if you want on our site, and we kind of walk through that as well. And at any point you can go to our site, HarborFinancialOnline.com, which we have the link at the bottom here, and you can prepare your tax return directly on the site and learn more about this deduction in other areas. So I'm going to continue with the video. I just wanted to point that out to you guys so you know where the site is. Another area here, if you're 65 or older or blind, separate, you're entitled to a higher standard deduction amounts. So when you complete your tax return, they ask you those specific questions, and then they'll apply the increased deduction based on these different criteria areas. For each dependent, qualifying dependent, your standard deduction will increase by $900. So, and that's on top of these amounts up here. If you're filing single or married or head of household, you're going to get additional $900 if it's a qualifying dependent. Now, if you don't qualify for the standard deduction and you just choose not to take it because you think you're going to get a bigger benefit out of doing the itemized deductions, these are some of the areas you might want to look at when you're trying to make that decision. If you have large uninsured medical expenses, those are all going to be deductible if you itemize. So I recommend if you have a lot of hospital and doctor visits that you're paying for out of pocket, that your employer's not paying for, you're probably not going to want to take the standard deduction. If you're paying interest and taxes on your home, you're not going to want to take the standard deduction, because those are all deductible, the entire interest and taxes on your residence. Large unreimbursed business expenses, employee expenses that your employer is not covering you for, not paying you back, then you're going to want to itemize, just because you'll get the deduction there. With the standard deduction, you're not going to be able to take that. If you have large uninsured casualty and theft losses, now this can be tricky because it has to be pretty substantial amounts of casualty and theft losses to make you switch over to itemize. So I mean, in some cases, if you have, you're single and you have $10,000 of lost damages due to any kind of event, a theft or a fire or something like that, then you probably will want to switch to itemizing that year. But then the following year you may want to go back to standard deduction. If you have large contributions to qualified charities, again, this is an area where you would have to be making substantial contributions to that charity in order to make the switch from the standard deduction to itemizing. So you just gotta kind of outweigh the benefits of each and see where you get the larger deduction. And again, on our site here, harborfinancialonline.com, which I'll take you to, we allow you to do an estimate and a calculation of your taxes on here, where you can put in all these different areas that I've talked about, and kind of do an online calculation of, should I be doing the standard deduction or using the other area that I've discussed. So I would take a look at the site here, see where you come ahead and the bigger deductions you're going to get versus itemizing the standard deduction amounts. So I'm going to go back to the presentation real quick for you guys. Now, again, on this, what you need to realize is the most important thing is you're trying to increase your deduction with the standard deduction or itemizing. The main goal is to increase your refund and to get more money back at the end of the year. So hopefully you enjoyed this video. If you have any questions on the deduction, please send me an email at expert@harborfinancialonline.com, or you can check out our site, harborfinancialonline.com, and we have lots of great information on taxes. Any area that's going to increase your deduction, increase those credits, which leads to bigger refunds. So thank you, and hopefully you'll check out some of my future videos.